Then let's go into lot size and spread. Lot size and spread. So lot size is the amount of contract. I don't want to make it so difficult, or I don't want to make it hard for you to understand using BB grammar. No, this is a beginner's class, and let's just keep it very simple. Okay, lot size and spread. Lot size is the amount of contract you are willing to risk on a given trade, right? This is my personal understanding, not to sound too technical, right? This is the amount of contract you are willing to risk on a given trade. Lot size can also be used in determining the amount of dollar risk you are willing to take. Okay, for example, this is the math I did. If you have $100 in your account and you used a lot size of say 0.10 lot, okay, which is the amount you are willing to give on that trade, 0.10 lot. So how do you know the amount of dollar you will lose if you lose this trade? Okay, your $100, you now put 0.10. So this is the math. The risk could be 0.10, which is the lot size you put, times 10. This 10 is a constant, okay? 0.10 times 10 times 20. This 20 is actually the number of pips in stop loss. Okay, so if you multiply them, it will give you $20, which means this $20 is your risk. If you lose this trade, you are going to lose $20. So before you take a trade, you should know how much you are about to lose before you take that trade. Don't just take trade blindly, okay? Your stop loss 20 pips, some can use 10, some can use 5, some can use 30, some can use 40, some don't even use it. Like me, I don't use it. Okay, I've come to that point. I don't use it at all. Even if the account is $5 account, $10, I don't use stop loss. Okay, I've come to that point. So you will learn that in the mentorship. Okay, when you enter, you will see things. I know what I'm saying. Okay, if you lose the trade, it means you lose $20. You lost $20. You know your dollar risks before actually embarking on that trade. This is the simplest way. Anybody can explain it for better understanding. So we are still on lot size and the spread. All right. So spread has to do with the fees. Okay. I hope you remember what we did here. Yes, this place. All right. Okay. So lot size and spread. So I've been discussing about lot size. So this is like, in fact, let me just read it again. This is the simplest way anybody can explain it for better understanding. Let's not do confusing stuff. I don't want to do confusing stuff, but what you see here is what any beginner can understand. And if you don't understand it, don't worry. This is the video. Watch it and watch it over and over, and then ask me a question for this remaining 2-3 days that we have. Okay, but if you get on the mentorship, you are free, because in the mentorship we'll be running Zoom continuously. We run Zoom, we help our people, help them develop strategies. And also the mentorship, you are not just joining just to learn forex. There are other things I am learning. Okay, there are some other stuff I am developing. I want my my community to be one of the biggest, right? I'm just beginning it right now. Okay, so we are not just going to be all about forex. We're going to be all about forex and many stuff. All right, we're going to do big things. Okay, so just get ready. We'll unveil it soon. We'll unveil our mentorship soon. Okay, so spread has to do with the fees brokers charge to bring us access to the market. Okay, the fees the broker will charge you. Some brokers do charge with spread and some do charge with commission. Okay, depending on personal preference, any style. For example, this picture you are seeing here, you see, for example, if you see Euro USD, if you look at Euro USD, you see the spread. The spread is 10, which is 0.10. The euro USD spread usually ranges from 0 pip to 1.2 or 1.5. Okay, but this is 10, as you can see. All right, which is 1.0. Okay, if you see 15, it's actually 1.5. Like this one is 1.2, AUD is 1.2. Then this GBP that you are seeing 8 is actually 0.8. So these spreads, these are like this euro USD, GBP USD, AUD USD, NZD USD that you are seeing here. All these things are major pairs. We've already dealt with all these things, but I will show you everything, how to get it on your smartphone, and then for PC, I'll do both phone and PC. But maybe I'll just do just phone, okay? Because I know majority of people don't like using their their laptop, because it's not everybody that have laptop, okay? It's not everybody that have it. So I'll just do more of the phone analysis instead of the laptop. So I'll also teach you how to navigate throughout the phone. Don't worry, we'll do all of that. How to get your broker, how to get registered, and all of that. Don't worry. Okay. All right. So, for example, when you enter a trade, some broker will charge you from the spread, and some broker will charge you by commission, and some broker will charge you both by spread and commission. That is why it is also good to follow the kind of brokers I am following. I am following Exness to trade, but don't worry, if you want to, if we will get you our links, okay? We'll send you the links for you to register so that you know what to do. I follow a broker that just charge based on spread, okay? The commission aspect is if your trade, okay, if you enter a trade today and you are going to hold the trade until tomorrow or next tomorrow, the broker will be deducting your profit. So if it is a profit you are making, the broker will be deducting from the profit. And if it is a loss that your trade is making for 2 days, they will still be deducting it. You understand? They will deduct from your remaining account plus your loss. They will pack everything. And also they are still charging you on spread. You understand? That is why mentorship is really important. You don't just jump into things because you are hearing Forex, okay? So I use different types of brokers depending on my goals, either for small or big accounts. So if I want to trade small account, I know the brokers I'm using. If I'm trading large account, I know what I'm using. Okay, so based on experience, right? So type of order. This one we are going to do it practical, okay? We are going to do this one practical. That is when we want to start to learn how to buy and sell, when we want to start to learn how to enter trades. Okay, so type of order. There are various types of order in Forex. However, we will only look at the frequently used order types. Okay, there's what we call the instant execution versus the pending orders. Instant executions are orders that when you come to the market, you go to the market to buy something, you just pay. Man, I want to get this phone. Okay, you just pay and take the phone, right? What is that? That is instant execution. You pay the vendor and the vendor gives you the phone and you just walk away. That is instant execution. But pending orders is when you come to the market, maybe the phone is very expensive, okay, and the money you are having is not up to that amount. You can pay the vendor and tell the vendor, I am coming back with so amount of money. That is what we call pending orders. Okay, you didn't get the goods while you were coming back. The order has to pend, right? So when you come back and you complete the money, you now take whatever you want to buy and then you go. That's pending order. Okay, so for example, also you can also keep money and then wait for price to be cheaper and then buy. But I don't think that one works in our everyday market though. But that is me trying to explain this thing to a novice. Okay, pending order means the thing you are buying or selling is not active right now. I will show you more practical. There's no way I will explain this one to a beginner and you understand what I'm saying. So the buy order and the sell order are all what? Instant execution order. Don't worry. We'll do the practical very soon. I'll start the practical very soon. Okay, buy stop order, sell stop order, buy limit order, sell limit order. Like I said, don't worry, I will explain it when we go practical. Other important ones to know is a stop loss order, very important for beginners. If you are a beginner, always use a stop loss. Take profit order and trailing stop order. This take profit is the way you set the market such that if the market get to a point and the amount of profit you want is okay, the market will close itself automatically. So it's fully, the MT4 is fully automated. Okay. Then there's what we call trailing stop order. This trailing stop order is when you are already in profit, you want to be securing your profit. You want to be moving this trailing stop order into profit. Okay, so that is what trailing stop is. Don't worry, you will see it